This was a very, very odd week in the market. This week's theme was just buy everything. Stocks are up on all of the buying. The VIX is up on all of the buying. Bonds are up on all of the buying. The dollar is up on all of the buying, and gold is up on all of the buying. For goodness sakes, who did we leave off the buy train? Everything is just awesome. Well, until it isn't. In other news, Microsoft overtook Apple and Amazon while nearing the trillion-dollar market cap level. And I'm just exhausted. But let's take a look. We're going to mix things up today looking at the 2-year weekly chart on the diamonds, which is the Dow Jones Industrial Average ETF. It's a proxy for the Dow Jones, and it's good enough for our use, so hopefully it's okay with you. Now, here we are at this level here with Friday's close at 265.34. Previous high there, and then before that, that was a high. Now, the Dow Jones, or at least the diamonds, are still in somewhat of a head and shoulders pattern, even though the S&P may have slipped out of its head and shoulders. But here it is, just barely a head and shoulders. If you want to look at it another way, it could be nearing a triple top. Now, moving on down here into the MAC, there we go, that high there, here, and then current level there. We're still moving up on the fast line and the slow line above zero, so it's accelerating, and it seems to be maybe slowing down a little bit as indicated by the histogram. So this more or less is kind of looking like it's topping out. So we're going to have to watch that. We're still above the fast line, or still above with the fast line above the slow line on the price rate of change here, but we have a pretty steep decline there. I think we'll get a reflection maybe coming here pretty soon. I'm not sure if this is going to go through the fast line through the slow line, but we'll have to watch that. Moving down to the RSI, as with the diamonds, the S&P, the Nasdaq, and the Russell, the problem is this divergence, the decline in the overall relative strength index, being that was the high there, the interim high at this point. We're currently at 66.63. That's above 50. It's relatively strong, but in comparison to these previous highs, it's weakening. That's the big red flag. Moving here to the stochastics, looks like we're moving on over, doing the arch. We're near the top, and we'll be looking for the fast line to start heading down to that slow line and maybe move through as it did here. Here was a little bit of a different circumstance, but we'll keep our eye on all three of those. And the minor problem that we've talked about before is the volume heading on down there. Now, moving here into the Williams. Williams looks fine. Hopefully we can move down here, maybe have a sawtooth back on up. But we'll just have to wait and see. For now, we're still in that overbought territory. So at least by the Williams, we're still relatively strong. Moving on back up here to the price chart, I think things are going to carry on for longer, a week, two, perhaps more. But pretty soon, I'm going to be coming out with my first warning of 2019, and it's not far off. So, for now, everything is awesome, but that could change. For today, that's ChewDog Charts. Thank you.